This is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the Small Cap Discoveries Conference 2018 in Vancouver, BC. With me right now is Ian Cassel, founder of MicroCapClub, MicroCapClub.com, and Intelligent Fanatics. Ian, welcome to SNN Live.
Thank you for having me. Appreciate it.
It's great to have you on. So for those who may not know about MicroCapClub or Intelligent Fanatics, or you for that matter, what's your background and maybe a little bit about MicroCapClub and Intelligent Fanatics?
Sure. I'm a full-time microcap investor, so it's what I do for a living. I try to buy low and sell high exclusively in the microcap space. So obviously microcap's sub 300 million market cap, and really I focus on North America, so Canadian and the US markets. So I've been doing this for about 10 years full-time. And in the process, I really wanted to create a tool or a platform that would give me more idea flow. And so I helped to found MicroCapClub in 2011 to be sort of a private social network, if you will, that kind of allows experienced investors in the microcap space to exchange ideas in a private forum. And so really since 2011, we have around 600 microcap companies that have been profiled. And usually we average 5 or 10 new ideas per month. And today we have around 190 members across the globe. And we also have a few hundred subscribers that also just subscribe to see the conversations that we're having on all these equities.
So I have to ask this question since, I have you here. Before we get into the presentation that you did here, for those who may not know or may scoff at microcaps, for you, why microcaps? Why do you focus specifically on this asset class?
Microcaps really have historically been one of the investment classes where you can always gain an edge, and it's really been something that's been built into this space forever. And the main reason for that is the illiquidity that's prevalent in these small equities. It's impossible for larger, smarter capital to invest in these small, illiquid equities. Because if you can imagine, there's companies out there that trade $1,000, $2,000, $3,000 worth of volume per day. It doesn't make much sense for somebody that's managing a portfolio of 10 million even or 50 million, let alone $10 billion to even participate in this ecosystem. And so when you look back over the course of time, some very famous investors have gotten their start investing in microcap companies. Investors like Warren Buffett, Peter Lynch, Joel Greenblatt, they actually got started investing in this small niche of microcap investing. And when you look at some of the best performing stocks ever, from Walmart to Celgene to Amgen, they started as small microcap companies. These are obviously well-known companies that you've heard of today. And even if you look at the last 5-6 years, I believe around 80% of the 10 baggers, so those companies that have gone up 10x or more, have originated out of the microcap ecosystem, 80% of them. So I think it's a vetted investment class. Some of the best investors ever have invested here. And there's just this interesting internal dynamic where it's always kept out, the investors that have more money. And so it just allows people that are intelligent, that they can find and do some stock picking down in this smaller segment of the market and do really well.
And so that actually segues well into what you spoke about today, because as your presentation, the main title was, it's still, investing is hard. So tell me a little bit about what you spoke during your presentation.
Sure. Investing is incredibly hard. And, even though I've been doing this investing for 20 years, been doing it full time for 10 years, it never ceases to amaze me how hard it is. And I think it's almost the longer you've done it, the more humble you are and the more you respect what you're up against. So really the talk I gave today was on how investing is hard. And I tried to give some illustrative examples in different areas. And a couple of those examples, I'll just name a few of them. One of them is Amazon.com, which everybody knows about today. And I had a snapshot of a chart of Amazon.com in 1997, and back then Amazon was a 700 million market cap, small cap company, $1.50 per share. And over a 2-3 day period of time, the chart I showed that it went up 25% over those 3 days. And I know there's some traders that bought in and out of Amazon.com that day in 1997, not knowing that they were missing out on 128,000% return that would have occur over the next 2 decades. That's pretty amazing. And so, and another example I gave was Valiant Pharmaceuticals, and obviously we know that what happened to Valiant Pharmaceuticals here in the last 2 years, but that equity itself attracted in some really notable investors like Bill Ackman, investors like the Sequoia Fund, and that company at its peak was an 85 billion market cap company, and that company at its peak was, I think, 36% of the Sequoia Fund's portfolio. Again, these are some of the smartest investors in the world. And we all obviously know what happened. It collapsed. And, really just a lot of us here, I'm sure even you, Bobby, you've ridden in a stock, you found it early, it went up, and then it came right back down. And that's an incredibly painful experience. And that happens to every investor. It doesn't matter your pedigree or experience. And so it's just another example of how hard investing can be. And then probably an example that you liked most, I think we chatted about it afterward, was the example of Apple Computer. And so there was actually three founders of Apple: Steve Jobs, Steve Wozniak, and Ronald Wayne. A lot of people know about the first two. Not very many know about the third. but Ronald Wayne actually, he created the first Apple logo. He created actually the three men's first operating agreement and also the Apple One manual. And he owned 10% of Apple back then when they created that partnership. And just a few weeks later, then he sold that 10% interest for $800. And a lot of people know that part of the story. But what people don't know is, Steve Jobs wanted him to come back, and he tried to get him to come back, even offered him more equity in Apple, and he turned it down. Ronald Wayne just refused. And obviously we can look through hindsight that 10% interest would be worth $100 billion today. And here's somebody that knew Steve Jobs personally, he knew Steve Wozniak personally, and he still sold out of his position at the worst time possible. And it's just another great illustration of how investing is just really, really hard.
So you also went over in that presentation some of the things that you've observed that have helped you throughout your investing career. What were some of those, tips and tricks that you gave forth to the audience?
So probably early in my investing career, maybe one of the things that I got lucky with was I would buy a position, I'd go all in all at once. I've always been a concentrated investor, even today. I own about 6-7 positions in total. But back then, I would go all in on one position right away if I liked what I saw. And, I got lucky early in my investing career. I had a few of those that worked out well. But what I learned through experience is you don't really need to take that risk right away. The great thing about microcap investing is these companies are small, and so as long as management executes, there's a long runway to the upside as long as management executes. And so there's no reason to bet the farm right away. You can kind of make a few smaller bets and watch management execute, and if they're executing, you can buy more. And some of the best investments I've ever made were investments that I was continuously averaging up in because it was driven by management execution and me wanting to own more of those management teams that are executing.
One thing that we talked about, and this is maybe diverging just a little bit from the presentation, but a couple of things that I talked about with investors here, especially in microcaps, is, sometimes they'll do the research, they'll have the conviction on a company, but maybe the stock will stay the same for 3 years. And then maybe at that point, then it will go up. And I think I remember you putting out a tweet a while ago where, you do 3 years worth of work and it only takes that 1 month to be life-changing. What's your comment on that in terms of, you got to stay the course in terms of, when it comes to your conviction in microcaps?
I think the most important thing a lot of times is in investing is not to be anchored to the thing that's moving, which is the stock price. You need to be anchored to the way the business is operating and being anchored to how management is executing. And a lot of times the value of what's going on internally at the company isn't reflected in the stock price, and that's why you buy things low and you hopefully take advantage of that. But oftentimes we're not in control of what happens in the future. Obviously if you buy a stock, you'd love for it to go up tomorrow. And so would I, but that's just doesn't happen very often, and I think when I think back at some of the investments that I make, probably some of the investments that you make, if we were to go back on those situations and if we were able to write down, when do I think certain things are going to occur, where do I think the stock price is going to be at in 6 months, 12 months, 24 months, we would almost always be wrong. We would always be, our expectations from the beginning of when we make that investment are almost always too high. I think probably 1 out of 100 investments I've made, where it actually happened, the time frame I predicted. And so that's why investing is a long-term game. We can't control when the stock price goes up. All we can control is knowing what we own at all times and paying attention to the business and letting that decide how we should be positioned in them.
So another question I had in terms of, you talked about in terms of your own investing strategy, you want to see management execute. So this is interesting, and I never really followed up with you, I think, when we did our first interview back on the podcast, 3 years ago. But in terms of how do you manage your own expectations and your own levels of what it means that management executes? You can say that they're going to do something, but, at the same time, you still have to kind of qualify, okay, well, all right, I guess I was executing, or it's like, oh, wow, they really executed there. You see what I'm going?
Right. Yeah, A lot of it has to do with the research that you're continuously doing. I think I talked in the presentation about it's really important to continue to do due diligence in a company. I actually like to set up contact points throughout my scuttlebutt research when I'm doing due diligence to try to find maybe even some customers, some suppliers, some people that I can make contact with to get, public but good information on what is really happening at a company in the industry itself. And just try to keep a pulse on the company as close as you can. That's where I've been able to really benefit the most as a full-time investor. And I think another thing that I kind of hit on in the presentation is that 95% of due diligence is looking at the companies you want to invest in and doing the work and reaching out and finding a few of their employees, reaching out and finding a few of their customers and seeing if they're happy and asking them why. And the edge in investing, I think not only in microcap but all investing, is that 95% of investors aren't doing that, because it's hard. I think you had Paul Lountzis on a podcast not too long ago.
I was about to say.
Yeah, and so he says the same thing, and Paul's brilliant at it. A lot of people won't do this type of work because it's hard, it costs money. I think there's another thing he says, but he says much better than I could. But and that's the real reason. You just need to keep a pulse on the company, and I'm still doing this full time as an investor. Not because of the gains I've had, but because of the losses I haven't taken through the years.
You have to talk one point also when it comes to the one quote you said, how it's about slugging percentage and not batting average. Can you just?
Sure.
Yeah.
Sure. I think a lot of times as investors, we try to be perfect. We're trying to be 100% right 100% of the time. And I think that can be seen in sort of investors that have sort of these long checklists of what they look for. And if, better have 100 out of 100 of these things in this checklist. But oftentimes when you look back at history, the great companies that have come out of nowhere or even are right in front of us today, they didn't check mark all those boxes. And especially in microcaps, which are young, emerging, evolving companies, they're not going to check mark all those boxes. And you're going to be wrong. Some of these companies are going to evolve the way you thought they would. Some of them will evolve differently, and some of them won't evolve at all. And it's important that you keep a pulse on these companies so that you can sell them if the story changes and, hopefully save yourself. But it's really more about slugging percentage than batting average, because you're never going to be right 100% of the time. You're never going to hit the pitch at 1,000% average. It's about slugging percentage. And it's all about the ability to cut your losers as quickly as possible and lean in and own more of your winners, as you gain conviction as management executes.
And Ian, for full disclosure, do you own any of the companies that you mentioned during this interview?
No, I do not.
So, at the beginning, we didn't talk about Intelligent Fanatics. So I want to make sure our audience knows what is Intelligent Fanatics, and tell us some more about both books and the website.
Sure. So IntelligentFanatics.com is a website that we created about a year ago. And it kind of came to be from a project that Sean Eddings, my partner at IntelligentFanatics.com, and I came together on, which was to write a book called the Intelligent Fanatics Project. And the book was centered around, really this whole project was centered on the fact that I really wanted to, and so did Sean, want to fine-tune our qualitative lens for investing. We wanted to really dive in and look at some of these business builders that built businesses from next to nothing and built them into organizations that dominated their niche or geography or industry. What were some of the qualitative elements that you could have picked out early in those life cycles? And so it kind of got us to dive into a few of these companies, a few of these leaders, and we wrote a book about them. We wrote a book about one book. We had 8 Intelligent Fanatics. We had a lot of fun doing it, so we wrote another one. Covering the lives of another 9 Intelligent Fanatics, and then we launched a website, and you can sign up to be a member if you want. But all we do is really look at the qualitative aspects of leadership and seeing what incentives those Intelligent Fanatics set up. What type of core values could you have spotted early? Those types of things. And it's been a real fun, and people seem to really like it. So.
I enjoyed both books, and so I would be remiss if I didn't ask you this. You're looking at the microcap space on a daily basis. What do you see going on in the market? I'd love to get your comment on that.
I think the microcap ecosystem, it's always evolving. There's always going to be these hot areas. Right now it's cannabis. 3 months ago it was blockchain. It'll probably be AI here in another couple months or something like that. And so you're gonna get these kind of pockets. Yeah, you're gonna get these pockets of interest, and some of them rightfully so, and some of them wrongfully so. But I think there's always opportunity out there, and we're in a 10-year bull market, 9-year bull market, and a lot of people get despondent because they're not finding value or not finding ideas. There's I think 8,000 microcap companies under 150 million in North America. That's an extremely large amount of companies. That's more companies than that trade on the NASDAQ and the New York Stock Exchange combined. And so that's why this ecosystem is always a stock picker's paradise. And there's always companies that fall through the cracks, and we intend to find them.
And where can the audience go and find more information about MicroCapClub and Intelligent Fanatics?
You can find information at MicroCapClub.com and IntelligentFanatics.com. If you want to follow me, you can follow me on Twitter, which is my name, Ian Cassel, my handle.
And how can people become a member of MicroCapClub.com?
You can go to MicroCapClub.com, and the way you become a member is submitting an investment thesis on your favorite microcap stock. We're just looking for a 2 to 3 page investment thesis, and basically the membership votes on them every single month. Usually we get 5 or 10 applications a month, 1 or 2 get in.
My name is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the Small Cap Discoveries Conference 2018 in Vancouver, BC. With me again has been Ian Cassel from MicroCapClub and Intelligent Fanatics. Ian, thank you so much for joining me today.
Thank you, Bobby. Pleasure.